Hello and welcome. This is Hot Money on BloombergQuint Live, India's first digital live streaming business news service. This is a show which gets you a complete wrap of all the stocks which are buzzing in trade. I am Agam Vakil. Let's get in our experts for today. We have Vineeta Sharma of Narnolia Financial Advisors, along with Sharmila, Joshi, and Vivek, Mavani, who are independent investment advisors. Thank you all for joining us here. Well, today on the show, we discuss Infosys, the quarterly results, along with the raise-in guidance. We also ask analysts about the one mid-cap stock they are currently recommending to their clients. We discuss the well-spun group companies and whether there is any company which is worth the investment in. And lastly, we also talk about MCX, what's actually been causing the recent rally that we have seen in there. But let's start off with Infosys. It's been, well, one of the top gainers on the Nifty 50 today. Not only have earnings been in line with expectations with a raise in guidance, but of course the other piece of news is that the event risk is out the way, and that is to do with the clean sheet given to the CFO and CEO. Let's start off with Vineeta. I'm going to start off with you on your view on Infosys now and what you would do with the way things are stacking up right now.
So we have been positive on Infosys, and we were a little optimistic on that things will be positive on the management side also, with things that have cropped up in the past few days. Purely looking from the business point of view, Infosys has invested hugely in training the people, in localizing, in subcontracting, and getting work done. So top line has now caught up.
Right.
So if we see purely, the BFSI segment is still not performing. The retail is under pressure. But if we look at from the digital point of view, there's 40% revenue which is growing at a 40% growth rate,
right.
And that is actually phenomenal. So once there was a time when Infosys was struggling with the top line growth because it didn't want to give up with its margin, and that's the point when it lost on the top line growth.
Correct.
But now we see top line growth coming back. Even the margins, I think Infosys is the first one which has invested in localization, and almost all the costs are, I think from now on the Infosys margin should inch up gradually.
Right.
So, and there are a lot of mid-cap companies or other companies which will have to, given those expenses which Infosys has already done. So I see margin contraction in some companies, even in the large cap, while Infosys should take up with the margins going ahead. So I think Infosys is a good bet, and the profitability from here on should go on increasing. The attrition, which has been a very big cause, which the management was trying to arrest, looks to have been arrested. So even there talks about Infosys TCS valuation contraction, that margin should contract.
Yeah.
I think that should play out for the next 2 to 3 years.
All right, Sharmila, where do you stand here for Infosys?
So just sort of taking off from what Vineeta was saying, I think that point is very well taken, that they've upped their revenue guidance marginally, and the digital business put in a really good show this quarter, very strong show in fact. And I think now you're beginning to see the benefits of the new management having sort of settled into their roles and taking the business forward. But just a couple of things that I would really like to talk about. One is that this clean sheet that has been given to them has been given by their audit committee.
Yeah.
Of course, there was an independent auditor in that, but we still haven't heard from SEC in this regard.
Yes.
Okay, so I think that is important, because ultimately it is what SEC is going to say, which is sort of going to take things forward from here. And very honestly, if you listened into their conference on Friday, there were a lot of concerns asked, and I would sort of echo those, not just about what the SEC will say, because I think their entire examination, what all was shared that day, the whole process that they followed, seems to be pretty exhaustive. So I don't think the SEC is likely to find anything different.
Right.
But this whole thing of this whistleblower thing affecting the company time and again, and as they were joking about it, that this was season 3 of the whistleblower complaints. So where does it stop, and what are they doing really to sort of take care of this issue going ahead? so that it doesn't become such a big thing, because these things do affect investors, because you do see that erosion. So they didn't really have a reply to that. So I would wait to see if they really come up with anything that can sort of counter these kind of allegations coming against the company, and hopefully they'll deal with it better, because there is absolutely, it's a given that there will be a season 4 to this whole episode. And secondly, I think the reason I'm neutral on the stock also is, this 3% upside that we're seeing today was a given the kind of numbers that we've had. But from a valuation perspective, I prefer HCL Tech, because I think HCL Tech now is where Infosys was maybe 2 quarters back, where the new management has settled in, all the blocks are there, IBM is beginning to contribute, and on a valuation perspective, it's cheaper than all the other top 4. So HCL Tech is really my top pick here. But yes, of course I like Infosys, but I think I'm sort of neutral on the stock at this price.
Okay, neutral on the stock because of the impending event risk possibility. Vivek, what about you?
Well, it seems coincidental that exactly last Monday we were discussing, I had spoken about Infosys as the safest large cap / Nifty stock just last week, given the attractive valuations and dividend yield and likely uptick in growth. Now, Infosys has delivered exactly that. They have upped the guidance at the upper end, maintained margins guidance as well. And key highlight, of course, I mean, enough has been spoken by my co-panelists, but the large deal wins continue. I mean, the momentum of large deal wins continue, and in the 9-month, I mean, the 3-quarter period, the large deal wins are like plus 56%. I mean, why large deal wins are important? Because most of these large deals are multi-year contracts, so which gives much greater certainty of next year's and the year after's revenues as well, in terms of the likely growth that is, you could say, pretty much assured, as long as these contracts don't fall apart or the clients don't discontinue the projects. From a valuation point of view, at about 19 times current year numbers, current year is just 1 quarter, so we are talking of financial year 19-20 earnings. I mean, it's about 19 times, 16, 17 times 1 year forward, which is quite attractive even now. One should see an uptick of dividend as well. So one of the things that I had mentioned, that among the Nifty companies, probably Infosys has the highest dividend yield at about 3%, which was as of last year's dividend, last week's price and last year's dividend. I mean, with higher profits and free cash flows coming in this year, probably dividend should be about 23-24 rupees. So even now it's about 3% dividend yield, which must be among the highest among at least the Nifty stocks or among the large cap. 3% dividend yield is not very common. Gives you enough margin of safety that your downside is protected. I continue to like Infosys. I mean, a disclaimer I already have in my personal investment as well as investments on behalf of clients, and continue to be a buyer on declines.
All right. Okay, so that's the view on Infosys. Sharmila, I'm just going to take a follow-up on HCL Technologies. HCL Tech has a guidance which is the highest in all the 5 companies, in the top 5 Nifty 50 companies, and yet, and it's always been, that's been the case for the last 2 years now, but yet it's always a step behind in terms of appreciation of returns. What's going on? Why is that case?
So, that's what I was referring to actually, that if you actually see the last period, then HCL Tech has given very decent returns. And I think one of the reasons, of course, was this, that, now that, as I'm saying, now that the new management is in, it's settled in, now they'll take the business forward. So, I think market also waits to see for how these things sort of play out. And when they did that IBM acquisition, market didn't take very positively to that, because they didn't know what HCL Tech was really going to do with it. But now that they will see that beginning to deliver, and now that this new new management has settled in, as I said, now you will begin to see the positives of that. So sometimes market reacts in advance, sort of is a little cautious of these big ticket this. And let's admit, I mean, when they went in for IBM, it was, in a way, I think it can be a game changer for the stock also, if they play it correctly. So now again, that remains to be seen. So it's there in that zone now. Let's hope things work out for them.
All right, well, there you have it. And of course, it's one of the higher rated companies if you consider the Bloomberg consensus. That's HCL Technologies. But from there on, let's talk about one mid-cap stock that stands out for our panelists, given that markets are already at a life high right now? Vivek, I'll come to you on this one. What's your top pick in the mid caps?
Yeah. So basically, I'm quite bullish on the mid-cap PSU space, public sector companies, which generally tend to have in the last couple of years suffering from a not very good sentiment. Although there have been good PSUs who deliver and continue to deliver quarter after quarter, year after year on their growth, cash flows, return on equity, solid balance sheets. So all of the attributes that an investor would want in a company, there are PSUs which deliver that. So I'm going to name 3, not 1. So you have 2 as bonus. You asked me 1, I'm going to give you 3. Bharat Electronics, Cochin Shipyard and RITES, RITES, which is a railway PSU listed last year. All the 3 companies have business models which are order book driven, multi-year order books. Order books which take a couple of years to deliver. So which sort of assures them of future growth for the next 2, 3, 4 years. The other common thread across all of the 3 years, very consistent track record in terms of margins and return on equity. All of them deliver return on equity, have been consistently delivering return on equity of 18% and upwards. All of them have debt-free balance sheets and surplus cash also sitting on the balance sheet. So it's profits with cash flows, where unlike a lot of project or order book driven businesses, there are profits but cash flows tend to lag because there is a receivables issue, but not in the 3 PSUs that we are talking about. And valuations of all the 3 at EV by EBITDA level is about 6-7 times EV by EBITDA. That is adjusting for the surplus cash on the balance sheet. On the price earnings, all of them are at in the vicinity of 12 to 15 times, which is pretty attractive for the kind of business profile they are. Or strong order books and strong balance sheet. Sure. So I'm a buyer in all the 3, already have positions in them and continue to be bullish on the mid-cap PSU space.
All right. Okay, so mid-cap PSUs is what's looking interesting for Vivek. But Vineeta, what about you? What stands out for you right now?
So currently we are pushing V-Mart retail. And if we all understand the retail story in the country, 60% of the market is still unorganized, and if you look at V-Mart retail, it is concentrating on the mass fashion store. So it's not on so all the products around 350 to 500 kind of a range. Right. And the top line is concentrated on the 3 states, that is UP, Jharkhand and Bihar, and from where it is deriving around 55 or more % of of revenue from there. So a retail store will grow once the SSG grows, or if they are continuously investing into opening of more stores. Right. So currently for V-Mart, the kind of SSG growth for the last 3 years, it has been around above 8% or so. Yeah. And the company is continuously investing to add more and more of stores, and that too not with debt, because they are taking it on the rental basis, and there's not debt. The company is debt free currently. Right. So there were 50 store guidance addition for FY20, and they have already added 45. So we see good top line growth, some 15 to 20% top line growth for V-Mart, and that space right now is actually, if we see in merchandise, the kind of segment that V-Mart is catering, none of the companies in India is catering. Right. So you have, so it's catering to a large population based state where the per capita income is low, so it's playing a volume game, sort of. And the balance sheet is pretty lean, and if we look at the growth, some 20% growth for going forward. Right now the price to sales is only 1.3. Right. So because of Ind AS, some this quarter revenue may be not revenue, but on the PAT side we might see some kind of volatility because of the rent adjustments and interest costs going forward. But I think from FY21 point of view, one should have this in the portfolio, keeping the the top line and the bottom line growth that we can see going forward.
Yeah, Vineeta, actually that was my follow-up question, because the past 2 or 3 quarters have been volatile, and as you said, because of their operational profitability has been a little bit of a problem. So you're saying that FY21 should start seeing
because
things normalize for them.
the things will normalize, once you start seeing year on year, because the free cash flow for the company is still growing.
Right.
So if you look at the PAT figure, obviously optically it doesn't look very good.
Yep.
But if you are able to, if on a yearly basis, if they are able to maintain a 2,000 crore or a 1,800 to 2,000 crore of top line once it comes, I think there will be good profitability growth that we'll be seeing going forward.
Okay, fair enough. And of course, for those who may be interested in in V-Mart, they may very well take advantage of the recent volatility that the company has seen. But Sharmila, coming down to you, what's your topic in the mid-cap space?
So I wouldn't say topic, and very honestly, from the start of this year, with a new decade, etc., everybody's talking of that mid-caps could very well take the march this year over large caps. Well, I'm honestly still not convinced, because I think that you need to see little bit more sort of macro data improving before you, because everything is otherwise if and but for the mid-cap space. Like if you look at auto ancillaries, it's like if auto numbers improve, then the ancillaries, so etc. etc. But so I think there are a couple of sectors which stand out to me, which are doing well and which will do well regardless of so many of the other ifs and buts. I think insurance is one sector. I have recommended it in the past, and this morning we got very good data there. So I think that's a sector that continues to grow, the life insurance space. But the stock that I'm going with today is another space that I like, which is the gas space. Okay. So it's the entire space that I like, because I think that increasingly we are finding greater focus on improving sort of availability of gas. Right. Everybody's sort of increasing their pipelines. You're seeing more and more vehicles on the road which are using CNG. You're seeing more industrial use for CNG. You're seeing more and more household using piped gas. So I think this is a business that will again sort of continue to expand. So I would have gone with IGL, but IGL in the Russia gas, but that's not exactly a mid-cap, so I'm going with Gujarat Gas. I think the concern here will be natural gas prices, because they have come down even today. Yeah. And they had been on a tear for about almost like 20 months, and after that we're beginning to see them dip a little. But it is really more the thrust that we're seeing of more and more industry and more people moving towards gas. Right. That I think that gas is slowly sort of going to be the replacement fuel that we are going to offer, and that's why this is an attractive space to be in. So I'm going with Gujarat Gas.
Okay, there you have it. So, it may be a little bit of a surprise, but at least 2 of our panelists are actually looking at PSU sector, to provide those gains that are expected from the mid-cap space. And of course, Vineeta, as she's already mentioned, she's banking on the retail sector, specifically V-Mart, which caters to the masses. But from there on, let's move on and talk about the Welspun Group. A group, which usually does go with a lot of sharp moves, and those tend to be towards the downside. That said, it's not exactly been, a very noisy last few months. But let's consider this group and let's see how things stack up, whether or not our experts like anything in among these companies. Vivek, I'll start with you. Your view here.
See, I per se don't have real interest in Welspun. Basically, as investors, we are looking at companies which would deliver sustainable and consistent growth with cash flows, with high return on capital, return on equity, and balance sheets which are fairly strong, typically debt-free balance sheets. Now, what is indifferent from the ownership point of view, as long as those attributes or parameters are satisfied. So it could be Welspun, it could be any company. I mean, as I just a few minutes back we were talking of PSU. So I mean, different even to government ownership, as long as companies deliver on the performance. Right. In case of the 3 Welspun companies on your screen, I mean, there's been nothing so exceptional either from a growth, cash flow, return on equity, or any of the business developments which have been so positive that it merits a special, I would say, mention or a place in the portfolio. Welspun Corp, I mean, which is the pipes business, is highly cyclical and sensitive to the oil and gas. I mean, investments in oil and gas sector globally, something which is beyond my understanding, to be very honest. Tried it several times in the last 15 years, but failed. Welspun India, the textiles business, never really recovered from the Egyptian cotton issue that they had few years ago.
Right.
I mean, at that point of time, I mean, the stock price of this company used to be like upwards of 100. If I remember, from 120, it had like collapsed to maybe 70-80%. I don't really know what the recall what the lows were, but it's never really recovered back.
Right.
And the third company, Welspun Enterprises, which is basically a holding company of several infrastructure projects that Welspun has ventured into, which include road projects, some renewable energy, something else in oil and gas space also. Again, something which is really not much of interest to me, because they haven't delivered any exceptional performance to catch the eye.
Right.
So for me, ownership is its indifference of ownership is just that I don't see anything attractive in the three Welspun companies which are listed.
Okay, all right, fair enough. So no takers from Welspun Group for Vivek. Vineeta, would you agree?
So we've not been tracking any of the Welspun Group companies. So none of the companies are there in the coverage.
Okay.
One company that I have been lately looking for is Welspun Industries.
Right.
So I see maybe, but I'm not totally updated on the whole story though. Whatever I know about it is like, you know, they have got some tax rebates. So 8% on ROSCTL and then MEIS some 4% export incentive that they are getting. And what Vivek was mentioning, so they had they had to book some 225 crore of losses, or they they took it in their books because of the Egyptian
cotton,
group, because of the target group, I think. So because of that, and currently what we are seeing a turnaround because of in the EBITDA margin, gross margin, because of their incentives that they are receiving. Also, they already had around 3,800 crore of debt in their books, and that is so they are already repaying the debts, and currently it is around 2,800 crore, and management is saying that by FY23 they will be debt free.
Sure.
And 2 quarters profit assures us that maybe things go right for Welspun India. And that's all that I'm updated about Welspun Group.
Okay.
So maybe something might be good on the Welspun industry, because the kind of it is a flooring business wherein it has done a capex of around 800 crore. Also on the top line for home textile, on the towel business, that is doing that is caught up again.
Right.
So maybe somewhere there, but not updated on any other Welspun.
All right, fair enough, Vineeta. Sharmila, what about you?
Yeah, so I think as opposed to both the other two, I have tracked both Welspun Corp and Welspun Industries for a very long period of time, and at one point I also like both the stocks, because at one point in time where we had crude hitting $140, pipes was the place to be in, because it completely made sense to then have the pipeline reaching the last mile, etc. And then that sort of fell through because crude corrected, etc. And Welspun Industries unfortunately fell through because they claimed that they were selling Egyptian cotton, and it wasn't Egyptian cotton, and there was a case against them. So now what we have really seen is that in both the stocks have sort of recovered. Probably Welspun Corp more than Welspun Industries, because they've got this. They've had a couple of orders coming in the US. I think last week there was some news of a big order that Welspun Corp has gotten. So that has sort of had a run up. But I would go with Vineeta, and I would say that Welspun Industries for me would be the stock that I would sort of track in this basket, because they have closed that Egyptian cotton case. So that's not sort of behind them. And that used to be a very sweet spot for textile companies who had managed to have these exports to all the Walmarts and the Targets in the US. So it used to be low margin business, but it was sort of a very steady state business for them, where they were sending bed sheets, towels, etc. And this is a huge market in the US. So it's slowly, I think things will start getting back to normalcy for them. And as again Vineeta said, always you hear some or the other relief coming for textile companies. So the valuations there are attractive. They have gotten over that trouble. So there could be an upside from current price. So I think within that group, that's probably because of the price point that it's at and because its troubles seem to be behind them, that is a stock that you could look at.
Okay. All right. Well, guys, from there on, let's move on and talk about MCX. Unfortunately, since we are running out of time, I'm going to request our experts to keep their answers in less than 30 seconds. Just a summary would be more than good enough for us. Again, Vivek, coming to you, where do you stand as far as MCX is concerned after the kind of rally that we've seen for this one?
Well, firstly, I don't have MCX under close coverage, so I don't know. I don't track it in detail from financial point of view. But an observation I have made over the last 10 years that MCX is, of course, the largest exchange for gold and silver trading in the derivatives space. And whenever gold and silver have rallied, MCX stock prices also rally. Now, the two seem to be otherwise independent events, but there is a very strong correlation. I mean, if we can pull up a long-term gold price chart and long-term MCX chart, the correlation is established.
Right.
Because finally, an exchange earns revenue by commissions on the trading volumes. So, where the gold price rallying actually should really not matter to the exchange. But this is an observation I have made.
Sure.
And that's the only thing I can make out of the rally because again, I'm nobody to really comment on the financials because I have not had a detailed study on the financials.
All right, fair enough. So, Vineeta, what about you?
So MCX is a good stock to have in portfolio, and right now, we see the commodity market growing many folds from here on. So it's a long-term bet. It has huge operating leverage in its book, and currently, since last 2 quarters, we have seen gold and the bullion volumes going up. So in this particular quarter also, the gold volume is up by 60% and the silver volume is up by 47%. Right. Overall, the total volume for MCX has gone up by around some 18% or so.
Right.
So I think top line growth is momentum. Quarter on quarter we'll see some degrowth, but top line growth is maintained and huge operating leverage that will pay the profits.
Okay, so there is operating leverage which may pay or reap profits. Sharmila?
Yeah, I'm completely positive on the stock, and I think that we've really seen it spike up recently because of everything that's happening in Iran. We've had a run on gold, we've had a run on crude. That's reflected in the trading volumes that MCX does, and they've reported some breaking sort of volumes, and it's reflected in the stock price. And I think that's the way to look at the stock, because I think globally commodity markets are much larger than equity markets.
Sure, yeah.
So in India, the market is at a very, very nascent stage,
right,
and they are the leaders there. So I think that they have the bulk of the market share. So they have that advantage. They have the bulk of the market share, and I think they have way to go from current levels. So yes, I think all these intermittent sort of problems could be there, but in terms of volume growth and just the way the market has to develop going ahead, there's a lot of room in MCX. So I'm completely positive on the stock.
Okay, so positive on the fact that there's a possibility of higher turnovers and the prospects of turnovers eventually, specifically in the commodity space with the kind of market share that MCX does have. But we have reached the end of this show, so I'm going to take a moment to thank all our experts on the panel to take us through the many views that we've discussed in terms of stocks and sectors. And with that, it's a wrap on today's Hot Money, but our Speak You is up next. Stay tuned to BloombergQuint.